Short supply and strong demand is a perfect combination for a record price, and that's just what is happening with tin, a born-again metal that traces its history back to the Bronze Age of 5,000 years ago all the way into the semiconductors of today. Drifting at around $14,000 a ton early last year, the tin rush started with a surge in demand from the electronics industry, where it is used as a solder to be selling on the London Metals Exchange, LME, this week for an all-time high of $32,700 per T. That 133% increase means that low-profile tin is now the high flyer in the metals world, sliding past copper, nickel and aluminum, which have been riding the same post-pandemic growth spurt. But what's really supercharged the tin price is the near disappearance of stockpiles, which, in the case of the LME, fell to just 825 tons in late May, down 85% in less than 18 months. Supply disruptions in Indonesia, China and Myanmar are the primary reason for a decline in tin global output. At the same time, demand for the metal has risen as a replacement for lead in electronics and specialized alloys. The tin boom was first reported here in February, when the price hit what was a 10-year high of $25,290 per T. Over the last 4 months it has risen by another 30%. Can tin keep rising? That's question which has metal traders watching closely, because the supply-demand fundamentals are encouraging for tin to trade even higher over the next few years. According to its latest analysis of the tin market by Macquarie, an Australian-based investment bank, the outlook is for sustained deficits of the metal. Indeed, to avoid estimated stocks dwindling to near zero in the coming years, the market is likely to need persistently high prices in order to deliver both demand destruction and fresh supply, Macquarie said. The key question for the latter, fresh supply, however, is where from. That comment from Macquarie goes to the heart of the tin issue. It is a metal which most mining companies lost interest in decades ago because of a belief that it had seen its peak years in tin plating and in unpopular alloys such as lead-heavy pewter. The net result is that few explorers have been actively looking for tin at a time when copper and gold were attracting high prices and battery metals such as lithium, nickel and cobalt were seen as future winners. The collapse in tin supply can be seen in Macquarie's market balance estimates, which show the start of a deficit last year when demand exceeded supply by 11,000 tons, forcing a drawdown of stocks. Shortage to last year's this year, the deficit is forecast to have grown to 12,300 tons, with the shortfall expected to last until at least 2025. Tin prices have been lifting month by month since April last year, benefiting from the rapid recovery in global demand and Indonesian supply disruptions, Macquarie said.